What's up, everyone, and welcome to another Bitcoin market update. In these videos, you will learn how to use technical analysis to forecast price movements in your favorite cryptocurrencies like Bitcoin and others, and also see where we are looking to buy and sell these crypto assets ourselves. So let's get into it here with a 3-month time frame on Bitcoin. We're starting off. We don't look at this time frame very often, but this candle is actually about to close in 9 hours and 20 minutes, and you can see right now it is looking absolutely god awful. In terms of the bulls, if we're looking at this from a bearish perspective, this looks great. Bears are seeing a very long-bodied bearish candlestick here, with the top of these two candles being flat. As soon as we kind of open this, you see that we had pretty short upper wicks here, people taking profit around the 60k level, and then a big sell-off here. So pretty much the easiest trade that I see here is from the open of this next 3-day candle, wherever that's going to be, to the low of this candle here at 28,796. So right now we're at 34,530. If we were to take the trade down to that level, it's about 16%. So the easiest possible trade that you could take, in my opinion, is basically when this opens, you've got 3 months to make about 16%, because it's very, very likely that we will go down and form we will go down and make this form a high by breaking the low of it over the next 3 months. It's very unlikely for us to do something like this, where we form this candle, then the next 3 months we just go up. It's just unlikely. And the reason for that is because the candlestick itself, if we look at the volume, massive bear volume. If we look at this from the candle body perspective, bearish. All right, 1 month time frame. 1 month time frame is about to close in 9 hours as well. Right now you can see we have this declining bear volume. Right now the candlestick looks relatively good in terms of us having a bounce in the next month. And the reason for that is because of these lower wicks here. We'll see where this candle closes, but I'm keeping a close eye on this. With this closing in 9 hours, a lot of people watch the monthly close, so this will be interesting to see how the price reacts once this candle does end up closing. So let's go down to the weekly time frame here. From a weekly perspective, right now we have not seen a lot of follow through from the bulls on this bullish divergence that we have here on the RSI. In addition, we do not see a lot of follow through in terms of the liquidity grab right here below these two lows. We had this long lower wick, but then since the open, we haven't traded up very high. And the reason for that, which we'll talk about in a minute, is a resistance zone on the 2-day time frame. But if we look at this from a weekly perspective, you can see if we switch on the super guppy here, we're getting close to the green EMAs not holding anymore. And so we've went into this once, we came up, now we're coming into a second time, we've come up, and now we might go into it over the next couple weeks a third time. If we go through it a third time and we break down, these are going to be very strong resistance zones for price, and so we'll see what we end up getting there. In terms of a resistance level, sorry, let me turn these off. Historical pivots, they're so distracting. We talked about the R1 pivot being our main resistance zone. That still is our resistance zone up here at about 37,500. We did not come up to that level, but right now we're having this kind of mini sell-off on the weekly time frame. But that's our main resistance zone because we've closed both of these candlesticks below that. Next resistance zone after that is the 46K. 46.3 is roughly where that is for that indicator. Let's look at the Ichimoku cloud quick. Okay, really nothing to talk about there. All right, 2-day time frame. So we talked about this gray level. This level is holding up like a champ right now. Taking a short on this level, we've already yielded about 4% on spot. So if we look at this from the wick of the candle, about 3.9%. So this is very clearly a bull trend right here. low, high, higher, low, higher, high, broke through the level. Okay, so this candle right here is a resistance zone. We come up, we don't touch it here, we come down, we form a higher low, we come up, we form a higher high. Now, what I'm watching over the next day and 10 hours is either the bulls pull up from pretty much exactly where we are now. This is kind of the bull's last hope on the lower time frames for this trend on the 2-day time frame to be confirmed, in my opinion. We would need to close this candlestick above this key high right here, and not go below the wick of this previous 2-day candlestick right here. So right now we have one candle close above this key high. If we get another 2-day candle close above this key high, it's going to be very notable, and this will turn into a support zone for price. It's unlikely that will happen, though, in my opinion, which I've been talking about on this channel. And the reason for that is because if we look at things like the Super Guppy is looking like it's just about to expand to be in the most bearish scenario. If we look at this from the other perspectives, Ichimoku cloud, we're below the cloud, which is bearish. If we look at this from the perspective of the pivots, there's really nothing here. But this is the resistance zone. Usually on the first test, levels like this tend to hold. I mean, so far, if you're thinking in terms of, profit potential, it's already in profit. So, it's already held in that regard. So it's already a profitable trade. But in terms of, it actually reacting to the level, we need to form a high here. And the way that we would form a high is by breaking the low of this candlestick at 33,873. So let's talk about what we could potentially see here on the lower time frames. So from a lower time frame perspective, here's the main support zone that we're currently operating on. This purple level right here. So this purple level is from when we had our bull trend right here. Very clearly, low, high, higher, low, higher, high. 2 candle closes above the key high, and now we're in the zone. If we go through this zone like this, we go right through it, and we close 2 12-hour candlesticks below it, and we retest this level, this is going to be a very strong resistance zone for price, and I would imagine that's going to take us down pretty significantly. So that's something I'm keeping an eye on. From a 4-hour perspective, I mean, that it might seem like I'm just skipping over this, but this is pretty much all I'm seeing right now. Besides the 2-day level that we talked about, is clearly the resistance that we're bouncing off of here. So from a 2-day perspective, for that 2-day level to be held, we'll actually need to go below this low at 33,873 for that to be considered a rejection off of the 2-day level, for that to be the first test. So when you're looking for resistance levels to break, you need multiple tests of that level. It's very unlikely, in my opinion, for us to blast right through this level. It's far more likely that we will end up having a rejection here, and then if we are to be really bullish, for us to go up and then go through it the second test or maybe even the third test. So that's what I'm looking for right now, the 12-hour time frame. This is the must-hold level for the bulls. Bulls really need for us to pull up here. Right now, we are going to see in 9 hours what the volume looks like here. If the volume is increasing bear volume, if we get decreasing bear volume or even bull volume here, and we don't go below this purple level, pretty good news for the bulls, and the bulls will probably see a rise thereafter. But this 12-hour candle is a pretty critical one, and so we'll see what we end up getting here on the volume. If we get declining bear volume or bull volume, like I said, we'll probably see a bounce in the subsequent next day. If we do not, and we see increasing bear volume, the reason we'll probably see increasing bear volume is because we've already went below. I was trying to draw this. Increasing bear volume will show up if we go below this low, more likely, because you see the increasing bull volume here. There's stop losses below this low right here. So if we go below that low, it's likely that we're going to have increasing bear volume and then subsequently see potential follow through from the bears. The scenario that's also good for the bulls is if we go below this low, but we wick below this low, and then we close back inside of this purple zone. So if we do that, we go down below, we wick below this low, but we don't close below it. I'll show you an example of what that looks like from a 2-day perspective. See this low? See how we wicked below it right here, but we didn't close below it, we closed up here? That was bullish, and that's why when this candle opened, we saw this follow through here. Then we wicked below it again right here, and then we saw the follow through again. So in terms of the bulls liquidity grabs, these lows got wicked below, but they didn't close below it. So that's what the bulls will need to see from a 12-hour perspective. If we go below this low, the bulls want to see us, the bulls quickly buying the dip, and then closing back inside the support zone. 4-hour perspective, if we look at this from a 4-hour perspective, this is our support level right here. And this level has already been tested once. How do we know that? Well, we went into it right here, and then we broke the high of this candle right here. So this is a low. This white candle's low is the low. We went into it here, one test here, and now we're going into it again. So right now we've just formed an inside bar. Well, right now we're forming an inside bar. We'll see in the next subsequent 9 hours for the rest of today what the 12-hour perspective is going to hold, but that's really what I'm watching. I'm not really watching the 4-hour very much because the 12-hour level is the more significant level in my opinion, and so this is the must-hold level for the bulls. If we go below that, must-hold level for the bears is going to be this level if we close 2 candlesticks below it. Bonus trade that I'm taking today on Ethereum, if we get down to it, is this white candle right here. So if we look at this from the perspective of the 12-hour time frame, we had this bear trend right here. So we had a high, low, lower high, lower low, and then we pushed right through the zone and closed above it. So if we retest this zone, this is a zone I like for a bounce. So this is going to be a zone that I'm looking to buy if we do end up getting down to that level. You can see we already had a pretty long lower wick on this 12-hour candle, so it is unlikely for us to get down to that level right now, but we will still see. I'm still going to keep my orders in there, and it's got a pretty good risk-reward ratio because I think if we do go into it, we could see a pretty significant bounce. That's all I got for this one, guys. If you like this video, give it a like down below and subscribe for future educational content around crypto and blockchain technology. And if you haven't already, check out our beginner tactical analysis course that we've released on Leutheria.com. This is where you can learn all of the fundamental elements that we talk about on this channel, such as volume analysis, candlestick analysis, trend analysis, how to spot support and resistance, and a ton of other things as well. So check that out. There's a link for that in the description below. And also check out our Leutheria community Telegram channel. This is where you can learn and collaborate and grow with community members from around the world. It's free to join. You can go in there. You can get your questions answered by different community members. You can collaborate with them in terms of finding different projects and opportunities and a ton more as well. So check that out. And until tomorrow, onward and upward.